We're back for another update. Let's take a look at DGB over here. And what we see over here is a five-way move to the upside from 2014 going into the 2018 bull market. And then you have a correction very similar to that of XRP. You have a three-way move down, a three-way move up, and a five-way move to the downside with your fifth wave of your C wave bottoming out at your 78.6% fib. Now, this coin actually has a very similar structure and market sentiment to that of XRP, and the reason for that is because number one, we were created around the same time XRP was, and then for your March 2020-2021 run up, you had all of these holders thinking that this was an impulsive wave which will go way past your 2018 all-time high, when in reality this was just a B wave sweeping your buy side liquidity and then having a having a waterfall move down in a five-wave fashion for your C wave. Okay, so with XRP, we actually just rejected at the 78.6% fib, but for DGB, we just swept this buy side and then continued down from there. So remember, DGB is just forming a base, and this base had lasted over 2,000 days. Okay, how long is XRP's base? Over 2,000 days, right? We have a three-wave move down, a three-wave move up, and a five-wave move to the downside for your Elliott wave flat pattern. Bottomed out at the 78.6% fib and then went into over 685 days of accumulation at the lows. You have your selling climax, automatic rally, secondary test, failed break, secondary test in phase B below your psychological support, right over here, causing a short squeeze to the top of the range for your second failed break or your second bull trap. Once you get to this point in the Wyckoff schematic, you're not going to want to be in the market. It would be the worst time to be in the market, and the reason for that is because you're going to go into a very long creaking phase, and this creaking phase makes retail investors pull their hair out. This creak phase out of this 685 days of accumulation was 207 days. So that's 207 days of the market just yanking the chain of retail traders. Every advance is a failure. Okay, so like I said in my Casper video, the creak phase is going to be in the form of a descending broadening wedge, a descending channel, a falling wedge, whatever it may be. It wouldn't be the best time to be in the market, and the reason for that is because you're going to have a lot of advances, but a failure for the advance to actually come to fruition. So over here is your spring, right? You see how we come right back down to the bottom of the range and you sweep this secondary test in phase B. This over here would be your spring. You then have an initial advance, a throwback for your test before you have a jump across the creek. This is your jump across. This over here was your sign of strength phase. You then had an A, B, C correction, right? And now we're coming down to the 78.6% fib. And when we take our trend-based fib to this, okay, from the top of A to the bottom of A and up to the top of our B, you can see that the 2.236 is right there at the 786. Let's take a look at the 2. Okay, we're right on the 200% fib there. Okay, so this C wave is very extended. It's very extended to the downside. So this over here would be your optimal entry. This region over here. Okay, this over here would be your optimal entry around in between your 702 and your 786, measured using a regular fib from the bottom of our wave 1 to the very high at our sign of strength. Okay, on the linear scale. If we take a look at this on the logarithmic scale, our 618 is right here. Okay, so around this region over here would be the optimal entry for your wave 2 correction being finished before we have an explosive wave 3, likely taking you to around the 702.786 region. And this is just where the algos take you in crypto. It takes you to around the 702.786 before we see a reversal. So you're going to want to take major profit here, not financial advice. Likely come down for a 38.2% correction, maybe a 50% correction from there, and then have your final fifth wave to the upside, finally taking out this 2021 and 2018 high. Okay, so I hope you guys enjoyed the digibyte videos. Nothing to worry about if you hold digibyte. We are still moving along perfectly. We finished our sign of strength March 31st, and it looks like we're finishing up this backup phase in between our 78 and 70.2% fib using the linear scale. I hope you guys enjoyed the digibyte video. These targets are subject to change, and we'll definitely be making alterations to the wave count in the Discord. So if you haven't joined the Discord, please click the link in the description below. Hope you guys enjoyed the video. Peace out, and take it easy. See you in the next one.